I have simplified ICT power of 3, and in this video I'm going to teach you the entire ICT power of 3 trading strategy. Now, a lot of people tell you to look for accumulation, then manipulation, then distribution. But how do you identify the real accumulation phase? How do you identify the real manipulation? And how do you know when the real distribution is going to stop? They all miss out on this, and then they just simply tell you to basically look for this pattern, which in reality, let's be honest, it doesn't work like that. But let's start, if you're a beginner, what is exactly is AMD, right? Or power of 3. Both are the same thing. So power of 3 is basically when you get like a consolidation phase of the market where prices consolidates or engineers liquidity. And then manipulation is when price sweeps out either the sell side or buy side of the consolidation. And then you get like distribution to the upside. So that is pretty much like proper like power of 3 or AMD: accumulation, manipulation, then distribution, right? Accumulation, manipulation, and distribution. But what I'm going to do is I'm going to teach you from the very start this entire strategy on how to make it work and how to see consistent results, all right? Because the point of my videos is to teach you like proper like strategy that you can use again and again and make profits and pass your profit from challenges. So we're going to start with identifying your daily bias first, because without daily bias, this is not going to work, because there are power of 3 patterns everywhere. There are AMD patterns everywhere. So you got to choose the right one, all right? And I'm going to help you that. I'm going to help you with that. So one thing you need to know is that every single candle has a power of 3, okay? So what does that mean by that? That every single candle is going to have like accumulation, you know, like this, and then this wick is going to be the manipulation, and then distribution is going to be the close, right? This is a bullish candle. And similarly, if we make it, you know, like red, this is what it's going to look like. Accumulation, the wick is a manipulation, and then distribution. Our goal is to enter somewhere around here, okay, to maximize the entire move, to get the entire move to ourselves. And it is pretty simple. So how do you identify your bias first, okay? And I'm going to teach you the entire strategy now. So watch till the end. Don't skip any part of this video. Otherwise, you're not going to learn. So to identify the daily bias, we need 2 daily time frame candles, okay? 2 daily time frame candles. Remember that. So this is a daily candle, and then we'll have to wait for the next candle to do its thing. So let's say that hold up. Okay, so the second candle closed above the previous one, okay? So now the bias for the third day is going to be bullish. Why? Because we use 2 daily candles to identify our bias for what? Third day, okay? So on the third day, when this opens right here, our bias is going to be bullish, okay? And we can have, like, let's say this wick over here. Now, let's say that the third day candle opens and it goes up, but it also kind of pushes lower, right? Before going up. So what did I tell you about AMD? So this is how you pretty much identify your bias, right? With these 2 daily candles. If we closed above the first candle, then our bias for third day, which is right here, is going to be bullish. But how do we catch the move, right? And that's what I've been telling you, is that look for, so let's just drag this candle around here, the third day, right? This is what you're going to see on the third day. So you're going to have like, let's say accumulation, and then you're going to have this manipulation, which is the wick, and then you're going to take the trade to the upside. All right. So since our bias is bullish, we will be looking for bullish power of 3 entry pattern. Okay. And then there's one more scenario where price, the second day, kind of just wicks above it and then closes below it, right? Probably like bearish. It closes bearish like that. So we wick above the first day and then we close below it. Now, in that case, the bias for the third day is going to be bearish, okay? So your first target for that bearish day could be the 0.79 level of the Fibonacci, okay? So make sure you have these numbers on your Fibonacci. So when we get the scenario where we just wick above the first day and then we close below it, then yeah, of course, the final target could be this low, right? But it's not always going to go down, okay, towards this low over here to the lowest point. So we always can target the 0.79, which is the OTE level, okay? And pretty much you would look for the same pattern on the third day, right? So let's say that the day opens here and we push down like that, okay? And we have like this wick over here. And pretty much you will be entering somewhere around here during the manipulation move, and then we'll push lower. So now that we know how to identify our daily bias, let's move on to the actual strategy, okay? So what you want to do then is, let's say that we have this bullish candle closure above it, right? Sorry, I'm gonna quit making it fast. Okay, so we close above this for the third day. I'm gonna make this quick, guys. Give me a second. Okay, so on the third day, we open here. Now, what you want to do is drop down to 15-minute time frame, okay? So the third day, let's say it opens here. Our bias is bullish. Why? Because we closed above the first candle, right, on the daily time frame. Now you drop down to 15-minute time frame. Now this is, let's say, the opening price of the third day, right? This is where the open happens. Now on the 15-minute time frame, what you want to do is identify sell side liquidity to the left side of the opening price. So the liquidity that was engineered before the open of the third day on the 15-minute time frame, mark that out. Now, let's say that we open here. So I'm just going to do that. Okay. So that is the opening price. We have sell side liquidity. Our bias is bullish. So now what we have is we have accumulation. And then we wait for manipulation like that. So we took out sell side, our bias is bullish. And then on the 15-minute time frame, we look for our entry pattern. Now this could be change in a state of delivery, or a market structure shift, or inversion. But I stick with market structure shift or CAST sometimes. Once you get a market structure shift, you simply just take your entry from a fair value gap or an auto block. And also make sure that your entry is during London or New York kill zone, okay? This is very important. You don't want to take your trades during Asia session, okay? Because Asia session usually consolidates, it accumulates, all right? So you want to avoid Asia session for this strategy. Now, there is a way to identify the manipulation move to the tick and also the distribution phase to the tick. So you will know exactly where the manipulation phase is going to end and also where the distribution phase is going to end. Now, what you want to do is, first of all, identify of course, the sell side liquidity, but also identify the most recent market structure shift that happened, right? And if we use the Fibonacci from the last high, oh my God, my bad. What just happened here? Fibonacci from the last high to the last low. And then you want to turn on these settings, -2 and -2.5 of standard deviation. Now, the manipulation phase is usually going to end at -2 and -2.5. And also, it makes it stronger if there is some liquidity that is inside or just close above or below the -2 and -2.5. So keep that in mind, that the manipulation phase usually ends at -2 and -2.5. It can go till -4, but in very rare cases when there's like a bunch of liquidity down here, okay, that price wants to target. And then when we have the manipulation, we look for a market structure shift. But how do we identify the expansion? Where is it going to end? So you use your Fibonacci from the last low to the last high before the market structure shift, okay? And you can see we're getting projections of -2, -2.5. And that is also pretty much the high of the second day. So then when you take your entry, you can target -2 as your expansion move. Okay, pretty much that is the entire trading strategy. And then of course you can pair up SMTs. So you can look for SMTs, or you can look for like 15-minute fair value gaps near the liquidity pool. So when we sweep liquidity, we also tap into some form of 15-minute fair value gap, and then we look for a market structure shift. So we're only using daily time frame and to identify our bias and taking our trades on the 15-minute time frame. Okay, it is really that simple, guys. This is how you basically trade AMD. Now, a lot of people tell you that accumulation phase is going to look like this, but it's far from the truth, okay? Accumulation phase can look like this. okay? And then we can get like manipulation, and then we can get like distribution to the upside, like that. It doesn't have to be like this choppy price action. And that's what I'm teaching you right now. As long as you have the bias, and then you look for sell side liquidity sweep that was engineered before the market open on the third day, or the candle open. I apologize, I said market open, but it has to be candle open, okay? So the candle opens, look to the left side, identify sell side liquidity, which is right here, and then let's say we get a market open, a candle opens somewhere around here, right? And pretty much you just take your trades after the market structure. I'm going to give you guys a bunch of examples, and if there are any confusions, they are going to be cleared in no time. So let's move on to the examples now. All right, guys, so here is example number 1. And look at these 2 daily candles, right? So we have the first and the second candle. Now the second candle closed above the first candle's high. So now the bias for the third day is going to be bullish, okay? First target could be this high, and also it can go anywhere since we're at all times high, okay? So if I play this through, you can see that on the third day, right, which is the third day here, I'm not analyzing this, but we'll do that as well. So you can see on the third day, we had a manipulation, a little bit of manipulation, if you can see that, and then we pushed distributed up. So these 2 candles determined our bias, and the third day played out exactly as we anticipated. But how you would have entered this, so this is the opening price of the third day. Let's go down on the 15-minute time frame to see what exactly happened, okay? So notice here we have the opening price, and look to the left of it, and we see clear sell side liquidity, okay? So to the left side, we have sell side liquidity. Then you either look for like inversion, change in the state of delivery, or a market structure shift. So we have inversion here, but we also have change in the state of delivery right here, because this candle specifically swept the liquidity. So when we close above it, that could have been your entry, or you could have just waited for a market structure shift and then taken your entry from this fair value gap. All entry patterns can work. Choose whatever you like. But I would choose change in the state of delivery. My entry would be on the retest, and I would pretty much just put my stop below the bodies over here, to be honest, just to be on the safe side. And then I can go for 1 to 2, 1 to 3, 1 to 4. And look at this entire move that we kind of like, you could have caught. Okay, so let me give you guys a couple of more examples. All right, so here is another example, and this time on gold. So I would basically use the strategy on gold and NQ because they move the cleanest. And with this mechanical daily bias method, you're going to have a higher win rate, because Forex pairs tend to consolidate a lot on the daily time frame as well, but gold and NQ, they don't. Okay, so notice what happens here, right? Now let's just skip up ahead. Okay, so notice these 2 candles. Okay, let me just go back. Notice the 2 candles, 1, 2. So we closed above the first candle's high. Okay, so the bias for the third day is going to be bullish, okay, towards this high and also towards this buy side on the daily time frame. Now, if I skip ahead, you can see we opened here, we manipulated to the downside, and then we expanded to the upside. So now let's see what exactly happened and how you would have taken your entry. Okay, so let's go into the 15-minute time frame. Now notice here, we have the opening price here. Look to the left side and identify sell side liquidity. So we have this minor sell side liquidity over here, and we also have this significant pool of liquidity down there. Now, key thing to note, we cannot take our entry during Asia session, right? So now what we can do is use our standard deviation projections to identify where price can manipulate towards. So we use from the last high to the last low. And you can see the -2 is suggesting here. But look to the left, we have this liquidity that is very close to the -2 and -2.5. Okay, it is inside this level and slightly below it. So now when price sweeps that liquidity, right, then you can basically look for your entry model. And right here you can see we have a market structure shift, right? We also broke this structure, and then we left behind this fair value gap over here, right? And pretty much look at how beautiful the expansion was, right? So as I said earlier, the accumulation phase is not going to always look like this, because in this case, you can see we have this going on, right? And then we finally manipulate, and then we expand to the upside. So yeah, that's going to be pretty much it, guys. I think I'm going to give you guys one more example. So just hold on. I'm going to give you guys one more example. All right. So again, example on gold. So you can see we have these two candles, right? And we close the second candle closed above the high of the first candle. So our bias for the TED day is going to be bullish. Okay. So if I skip ahead, you can see the TED day was extremely bullish. So now let's see what happened exactly and how you could have entered the trade. So now I'm going to drop down to 15-minute time frame, right? This is the opening price right here. This is where the candle opened, and look to the left side of the open of the candle and identify sell side liquidity. Right here, we have sell side liquidity resting around here. Now, during London session, we go down and we manipulate, okay? We take out sell side, and then we can either look for a market structure shift or change in the state of delivery, okay? And then you can take your entry from this level, put your stop below the low in this example, and then you can see price just went up. Like, this strategy is crazy, guys. I don't know what else you need after this video, okay? So if you want more content like this, please hit the subscribe button. I'll be uploading a lot of videos on this topic in the future. So, and also if you want to trade live with me and watch me live trade every single day, there's a link down, the very first link in the description. Click on it and see if you are a good fit. I'll see you guys in the next one.